Shares of Canoo Inc. are trading at $2.02, and they are down around 61% year to date. Zooming out on the chart, we can see that this stock has had a disastrous run since its all-time high of $506 back in December of 2020. And for my December 2026 price projection, analysts are expecting Canoo to have annual revenues of $849 million, but I'm expecting them to have revenues of just $64 million because it's way too early to tell what their actual revenues are going to be at this time, and that works out to about 90 cents a share. Their TTM price to sales is 248, but keeping in mind the auto industry average right now is 3.84, so I'm going to use a price to sales of 5, which gives us a share price of 451, which is a 123% upside. It looks like other analysts are extremely bullish, with the average one-year analyst price forecast being 475, which is about 122% higher than where it trades today, with a high estimate of $7 and a low of 3. In terms of fundamentals, GOEV has beat all 4 of their last earnings calls. They do not offer a dividend, and taking a look at their revenue and net income, GOEV has basically had zero revenue to date, and their net income did take a massive dive in 2022 as they started making massive investments into their infrastructure, but it does seem to be on a positive trend lately. GOEV has a shareholder equity of $251 million and a total debt of $289, and that makes their debt to equity 115%, and they do have a free cash flow of negative $214 million, which is really bad, but that's just because of all the recent investments. Really, the only nice thing I have to say about GOEV right now is their upside potential is really good at 120%, but if we take a look at their entire risk to reward profile, their valuation, free cash flow, and debt situation, in combination with their unclear revenues, really take away from that upside potential and just introduce way too much risk for me. So for this reason, I rate GOEV a hold, because I think current investors could benefit from dollar cost averaging at these levels. I mean, keep in mind, this was trading at $500 at one point, so being able to dollar cost average at $2 makes a lot of sense, because in the short term, this stock does have some potential, but over the long term, the revenues are just too uncertain to recommend, especially with the free cash flow and everything going on. So that's all I have for you today on Canoo stock. Please drop a like, let me know which stocks you'd like me to cover next, and I will see you next video.